This is one of the most confusing topics on the CPA exam. Unusual items, cash flows, and taxes. Three things that don't mix the way you think they do. Welcome to Accounting with Yana. Let's clear this up right now. What are unusual and infrequent items? In accounting, most of what a company does is routine: selling products, paying employees, collecting receivables. These go into operating activities. But sometimes, not often, something strange happens. Something that is not part of normal business operations. Maybe a factory burns down. Maybe a flood destroys equipment. Maybe the government takes your land for a highway. These are called unusual and infrequent items. Here's the rule. If an unusual or infrequent item affects net income, it goes into investing activities or financing activities on the cash flow statement, not operating. Think of it like this. Your paycheck is operating. A lottery win is not. Let's look at a real example. Meet Evergreen Company. Evergreen owns a piece of land. The carrying value on the books is $200,000. Then one day, the state of Maine says, "We need that land. We are building a highway." This is called a condemnation. The government takes your property and they pay you for it. Evergreen received $205,000 in condemnation proceeds. Since the land was on the books at $200,000, Evergreen has a gain of $5,000. After paying $1,000 in taxes, the net gain is $4,000. Now, how does Evergreen report this on the statement of cash flows using the indirect method? Here is what happens. Step 1. In the operating activities section, Evergreen deducts the $5,000 gain from net income. Why? Because this gain is already included in net income, but it didn't come from operations. So we take it out. Step 2. In the cash flow from investing activities section, Evergreen reports the full $205,000 received from the condemnation. Not 204 or 200,000, the full 205,000. Here's where many students make a mistake, and it is an easy mistake to make. Evergreen paid $1,000 in taxes on that gain. So you might think, should we report 204,000 instead of 205? No, here's the rule. The gain is handled at its gross amount. That means 5,000, not 4. And the cash received from the condemnation also reported at gross. That means $205,000, not 204. The tax is handled separately. We don't mix the tax into the investing activity. We keep them apart. Why? Because that is what FASB says. The Financial Accounting Standards Board requires it. And FASB is the boss. Now, let's talk about income taxes and the cash flow statement. Some people suggest that tax payments should be split up. A little to operating, a little to investing, and a little to financing. The logic made sense. If a gain is in investing activities, maybe the tax on that gain should also go to investing activities. FASB said no. Here's why. Splitting taxes across all three sections would be too complex and too arbitrary. The costs would not be worth the benefit. So FASB made a simple rule. All income taxes paid go to operating activities. Always, every time. Under both the direct method and the indirect method. There is one more requirement. Companies must disclose the total amount of income taxes paid. It must be shown in the notes to the financial statements. So, no splitting. All taxes go to operations. And you must tell people how much you paid. Let's bring it all together. 3 things to remember from today. Number 1. Unusual and infrequent items go to investing or financing activities, not operating. Number 2. Report the cash at the gross amount, not net of tax. The gain is deducted from net income in operating activities. The full cash amount goes to investing activities. Number 3. All income taxes paid go to operating activities, period. No splitting. And always disclose the total taxes paid. That is it. 3 rules, 1 example. You now understand something that confuses a lot of students. If this video helped you, give it a thumbs up. It helps other accounting students to find this content. And if you want to keep learning, subscribe to this channel. We break down accounting topics one concept at a time. No confusion, just clarity. Thank you all so much for watching, and I will see you all again in the next video.